My name is James Bridgeforth. I'm a young and very successful investor who has generated tens of thousands of dollars investing in the stock and crypto markets. And in this video, I'm going to bring to you 4 stocks that you should avoid investing in 2025. The first stock that I recommend that you should avoid investing in is actually going to be Nike. And many people are going to listen to this and think to themselves, Nike has been one of the best performing companies, and I see that Nike has actually been a company that I see on an everyday basis. So a lot of the teachers or advisors when it comes to investing, the first thing that they tell beginner investors to do to evaluate or even just find companies in general is to look at the companies that they see on an everyday basis. So you can look at all the cars out there. Maybe you look at Tesla, maybe you look at Google, Apple, and you look at the shoes that people are wearing and you think Nike should be a good company to invest in. But the financial statements have been diminishing year over year. And this is solely because Nike is starting to lose the market share. There was once at a time where people solely and only wore Nikes, but it's getting to a point to where people are starting to wear Asics, people are starting to wear Adidas, people are starting to wear Hoka. There's a lot of different shoes out there, and it's taking up the market share, and it's leaving less room for Nike to grow. And because of this, their financial statements have reflected that, and not only that, but their price has reflected that. And if you look at Nike over the last 5 years, you can see that even though it's sitting at a $74 price today, Nike is down 27% over the last 5 years. And as a company that we're looking to add to our portfolio, and a portfolio that we're looking to grow our wealth, this isn't something that we want to include in it. So you can simply even just go to Robinhood and look at the charts and see, is this a company that I want to invest in? Although I've heard of it, let me not get tricked into the mindset that I can only invest into companies that I see on an everyday basis. And let me look that is down 27% over the last 5 years and come to the realization that this is not a good company for me to invest in my investing journey. Now that we've touched on the reasons that we should probably avoid investing in Nike in 2025, the next company that I want to speak on is actually going to be Intel. And many people are going to be familiar with this company as well if you've been in the market long enough. Intel was actually one of the biggest companies in the market during the technology boom of the 2000s, where it was competing with companies such as Google, Microsoft, Apple, whatever it may be. But Intel, it lost the market share as well. They just haven't been performing well. Their financial statements have reflected that, and Intel is sitting at $21 per share, but it's down 56% over the last 5 years. This is completely unacceptable. As an investor, you have to realize that these companies need to earn the right to be in your portfolio. Don't look at these companies like they're not reachable. You have to understand that you are the person in charge. They even have certain events where they'll have the shareholders vote on certain decisions within the company. So you have to understand your value and what you bring to the table as an investor. Because if people aren't buying the shares of these companies, then the company isn't as valuable as many people may think. So you need to understand your value as an investor. Don't just invest into random stocks. These companies need to earn the right to be in your portfolio. And the two that I just named have not done so, as Intel is down 56% over the last 5 years. The third company that's going to be on this list is going to be GameStop. And it's for many reasons that people already are aware of. And it's because GameStop doesn't really hold any value anymore. When is the last time that you've gone to GameStop and actually purchased a game? GameStop was once viewed as one of the biggest gaming companies in the world because everybody went to GameStop to get their games. I remember as a kid waiting outside GameStop late at night, waiting till the game would release the next day. So you have to understand that GameStop doesn't really hold much value because everybody is buying their games online. You have PlayStation stores, you have Xbox stores. Everything is digital. Nobody's buying physical copies of games. And because of this, their revenue statements have reflected that. The main thing that's going to affect the price of a stock is going to be their financial statements. And their financial statements have been diminishing year over year simply because people aren't going into the store and buying games anymore. GameStop was even at a point to where it was considering bankruptcy. This just shows you how poor of a stock and how little it's been performing over the last year to date. Because GameStop is sitting at $22 per share and it's sitting down 29%, almost 30% over the last year to date. This is a awful performance. These companies need to earn the right to be in your portfolio, and this is one of the companies that has not earned that right. Now that we've wrapped up the third investment that we should avoid in 2025, the fourth investment that I want to touch on is going to be SQQQ. And if you're familiar with the stock market or you're familiar with investing, you're probably thinking to yourself, I heard that this could be beneficial for investors during certain times of trial. And that is completely correct. But during 2025, I believe that we could have a slight dip in the next couple of months, but the market is going to continue to rally higher with the amazing sentiment that it has around it. SQQQ is just an inverse of QQQ. And I put this on the list because people can get confused when they hear that a great ETF to invest in for technology companies is QQQ. And that is very true as well. But SQQQ is a triple leverage inverse to that, to where basically if the stock market is performing terribly, then SQQQ will be up. And because the market has been performing so well this year, this isn't an ETF that you need to consider adding to your portfolio because you're just going to continue to lose money. This isn't something that you need to hold on to the long term and maybe gain returns when the stock market decides to go down, but this is something that you only need to use in swing trade situations. Because as you can see, if we go to the 1 year, you can see that SQQQ is down 63% over the past year. This is not something that you want to hold long term. And I brought this up because it can get very confusing to beginner investors. You hear about these ETFs and you may invest into the wrong thing. But if you look at the returns, you see that this is down 63% over the last year. This is not something that you should be investing in 2025. Maybe when we start to hit a recession, maybe in 2026 or 2027, whenever that time comes, this is definitely something that I will bring up in the future because it's going to do the inverse of the stock market. Whenever it goes down, this is the thing that you want to put your money into. Do a swing trade on this so that you're able to benefit greatly from the times of trial in the market and you don't have to sit back just losing your money. So that's going to wrap up the 4 investments that you need to avoid in 2025. We went over 3 companies, 1 ETF, and you have to think as an investor, you are in control of your portfolio. These companies and ETFs need to earn the right to be in your portfolio, and the companies that I went over today have not earned the right to be in mine, which is why I wanted to bring forth them to you today. So thank you all for watching this video. Feel free to like, comment, subscribe, turn on that post notification bell so you never miss an update, and I'll see you guys in the next video.